All right. I'm actually out on a rock climbing summer vacation, so videos are going to be a bit limited. I've only got so much data per month, but I'll do a quick one here. I've noted this before. Periods of difficult sideways trading are often followed by periods of strong trending moves. You can see the this period here. Um, in 2015, the market started going sideways, dropped down into the 4-year cycle low, and then once we broke out, we had a nice strong trending move. Same thing's happening here. I know a lot of people were trying to pick a top in this bull market during this phase, but this is not a topping pattern. This is a sideways consolidation, very similar to this. Also dropping down into a 4-year cycle low. This did occur early, which I guess should probably mean that this current 4-year cycle will probably stretch to maybe 5 years. But you can see it looks to me like we're ready to break out of this difficult sideways pattern and start the next leg up. Um, Intermediate cycles that break out late, an intermediate cycle usually don't follow through. They don't produce a sustained move. You can see that's what happened here, very late, many months into this rally. So this breakout here was probably not going to deliver a sustained move, just too late in the intermediate cycle. Same thing with this, very multiple weeks. So again, a breakout at this point, probably not going to deliver a sustained move. Here, however, we're breaking out of this consolidation box. We're doing it very early in an intermediate cycle. I know again, a lot of the perma bears are trying to pick a top, a double top, triple top, whatever they want to call it. This is not the time to be trying to short the market. A breakout that occurs early in an intermediate cycle very often does produce a sustained move. We're only, I think, 4 weeks into this intermediate cycle. Uh, right translated intermediate cycles can usually run anywhere from 15 to 20 weeks before they top. So, we're probably going to get through the summer and into the fall before we get our next intermediate correction, something that looks like this. But this looks like a confirmed breakout. It looks, it's occurring early, which can give us a sustained move. You can see we're heading towards 3,000. I think we're gonna reach that for sure, and I suspect we're going to break out above that, and especially if the Fed cuts interest rates on July 31st. That's the next FOMC meeting. A cut in interest rates would probably also give the market a tailwind, and if we ever do get a resolution to the trade war, then I think look out, it's going to be to the moon. But secular bull markets, they tend to last 20 to 25 years. We're only 10 years into this one, so I think we have a long ways to go yet. And my theory has been that second half of 2019, everything would go up together. Stock market is definitely cooperating. Gold is cooperating. Oil was cooperating until yesterday. I don't necessarily think that oil is going to roll over and make new lows. At this point, I think it's probably just to move into a half cycle low and will recover. But that's the one sector that might require a little watching. Everything else seems to be following my expectation, and everything is moving up together second half of 2019. I think everything is set up to produce some strong trending moves, very different than this difficult sideways pattern we've been in here in the stock market. Trending moves are much easier to make money. I'll move over to gold now. All right, so gold, baby bull right here, and then after the election we get the big move down that knocks gold into this difficult, very volatile basing pattern. The pattern changes, we get a cup and handle. We've broken out of the handle with a very powerful move that has gone above the baby bull. Gold has come back down to, I guess, sort of test this breakout, baby bull high. Didn't quite get there, but it was back near 1440 last night. So um, I'm going to say that's probably all we're going to get for a retest. And let me widen this chart just a little more. All right, so you can see basically for the last 6 years, gold has been in this difficult basing pattern here. We're breaking out of that basing pattern now. We've got one more resistance level here at about 1440 we got to take out, and then there really just isn't much resistance until we get up here above 1500, 1550. And a basing pattern this large, again, this is a perfect example. The longer a consolidation basing pattern lasts, the bigger the move is. This is a 6-year basing pattern. We're just now breaking out of this consolidation phase here. We've got one more resistance zone here at about 1440 we need to get through, and then at that point I think gold, well, I'm already convinced that gold has started the second phase of the bull market. The first phase obviously was the baby bull, and then the long basing pattern. I think breaking out of this handle right here was the kickoff to the second phase of the bull market. So once we get through 1440, I think it's game on, and then basically we'll only have two more resistance zones to get through at that point. One would be this 1550-ish level right in here, and the next one would be the 1800 level, and then at that point it's on to new highs, and I think finally the bubble phase of the long-term bull market in gold.